Think your Social Security benefits are tax-free now? Maybe, but only if you qualify. Here's something that might surprise you. Millions of retirees are about to get a major tax break they don't even know exists yet. And some people? Well, they're going to miss out entirely because nobody told them the fine print. I'm talking about something called the One Big Beautiful Bill. And yes, that's the actual name. It passed in 2025, and it's being called the biggest change to Social Security taxes in over 20 years. But here's the catch. It's not automatic. You have to know how to claim it. So if you're receiving Social Security, or you're about to start, stick with me. We're going to break down exactly what this bill means for your money, who qualifies for up to $6,000 in new tax deductions, and most importantly, what you need to do right now to make sure you don't miss out. If this kind of information helps you stay on top of your benefits, hit that subscribe button. It's free, and it means you'll never miss updates that could save you hundreds or even thousands of dollars each year. So what exactly is the One Big Beautiful Bill? Despite the unusual name, this is a serious piece of federal legislation that was signed into law in 2025 under the current administration. The bill was promoted as major tax relief specifically for retirees, and at its heart, it offers something that millions of Social Security recipients have been asking for, a new $6,000 federal tax deduction on Social Security income. Now, you might be thinking, wait, I thought Social Security wasn't supposed to be taxed at all. And you know what? You're not wrong to think that. When Social Security was first created, benefits weren't taxed. But that changed back in 1983, and then again in 1993, when Congress started taxing Social Security benefits for people above certain income levels. For decades, retirees have been caught off guard by these taxes, especially those with modest incomes who never expected to owe anything on their Social Security. The One Big Beautiful Bill is designed to address that problem, but, and this is important, it doesn't eliminate Social Security taxes entirely. Instead, it creates a significant deduction that could reduce or eliminate the taxes you owe, depending on your income level. Think of it as a targeted tax break for people who rely primarily on Social Security to get by. Let me break down what actually changed, because this is where it gets really important for your wallet. Before the One Big Beautiful Bill, here's how Social Security taxes worked. Up to 85% of your Social Security benefits could be subject to federal income tax, and the income thresholds were surprisingly low. If you were single and your combined income was more than $25,000, or if you were married filing jointly with combined income over $32,000, you could owe taxes on your benefits. Those thresholds haven't changed since 1993, which means even modest income seniors were getting hit with unexpected tax bills. We're talking about people who thought they were living on a fixed income only to discover they owed hundreds or even thousands in taxes on their Social Security. Now, after the bill, here's what's different. You can claim a deduction of up to $6,000 on taxable Social Security income. But, and this is crucial, this deduction is only available for individuals with what's called MAGI, or Modified Adjusted Gross Income, under $75,000 if you're single, or under $120,000 if you're married filing jointly. What does this mean in real terms? For many retirees, it means the taxes on their Social Security benefits could be reduced significantly, or in some cases, eliminated entirely. But you have to qualify, and you have to know how to claim it. So let's talk about who actually benefits from this new deduction, because this is where you'll know if this applies to you. The deduction is designed for retirees with modest or average incomes. Basically, people who are relying primarily on Social Security to get by. This includes seniors who might have a small pension, maybe some IRA withdrawals, or even part-time work income, but aren't what you'd call high earners. According to the latest estimates, roughly 90% of Social Security recipients will benefit from this deduction. That's a huge number, and it includes people who fall into these categories: retirees whose main source of income is Social Security, people with small pensions from previous jobs, seniors taking modest distributions from retirement accounts, and those who might work part-time to supplement their benefits. Are you one of them? Well, if your total modified adjusted gross income is under $75,000 as a single person, or under $120,000 if you're married, there's a very good chance this deduction could save you money. But here's something important to remember. Just because you qualify doesn't mean the savings are automatic. You still need to file your taxes correctly and claim the deduction. That's a step some people are going to miss. Now let's be clear about who doesn't benefit from this bill, because transparency matters when it comes to your money. High-income retirees won't see any benefit from this deduction. If you have large investment portfolios, significant rental income, or multiple income streams that push you above those income thresholds we talked about, this deduction isn't for you. Also, and this is something that's caught some people by surprise, if you live in a state that taxes Social Security benefits separately from federal taxes, you might not see the full benefit. States like Colorado, Utah, and others still have their own rules about taxing Social Security, and this federal deduction doesn't change that. The reality is, this bill is targeted at middle and lower middle income retirees. If you're fortunate enough to have substantial income in retirement, you're probably not the intended beneficiary of this particular piece of legislation. Here's some fine print that's absolutely critical, and I want to make sure you hear this clearly. First, this is not a total elimination of taxes on Social Security. It's a deduction that can reduce the taxes you owe, but depending on your income, you might still owe some taxes on your benefits. Second, and this is big, this deduction is temporary. It's valid from 2025 through 2029. That's 5 years. If Congress doesn't renew it, the tax rules will revert back to the way they were before. Why does this matter? Because you shouldn't count on this deduction being permanent when you're making long-term financial plans. It's a great benefit while it lasts, but you'll want to keep an eye on what happens as we get closer to 2030. This temporary nature also means that if you qualify, you should definitely take advantage of it while it's available. Don't assume it'll be there forever. So what should you do right now to make sure you're taking advantage of this deduction? First, you need to check your Modified Adjusted Gross Income, or MAGI. This includes your Social Security benefits, plus any other income like pensions, IRA distributions, investment income, and wages. If you're not sure how to calculate this, it's worth talking to a tax professional. Second, when you file your taxes this year, make sure whoever is preparing them knows about the One Big Beautiful Bill deduction. Not all tax preparers are up to speed on this new law yet, so you might need to mention it specifically. Third, use your SSA 1099 form. That's the form that shows how much you received in Social Security benefits, along with IRS tax estimators to plan ahead. This can help you understand exactly how much you might save. And finally, if you typically have taxes withheld from your Social Security payments, you might want to adjust those withholdings. With this new deduction, you might not need as much withheld, which means more money in your pocket each month. Here's exactly how you can check if you're eligible for this deduction. Log into myssa.gov, that's the official Social Security website, to review your benefit information. Then use the IRS Tax Withholding Estimator, which is free and available on the IRS website. This tool can help you understand how the new deduction affects your tax situation. You should also pull out your most recent tax return and look at your Modified Adjusted Gross Income. If it's under those thresholds we talked about, $75,000 for singles, $120,000 for married couples, you're likely eligible. If you're not comfortable doing this yourself, now might be a good time to consult with a tax professional who can walk you through the numbers and make sure you're claiming every deduction you're entitled to. Here's why all of this matters. You could save hundreds or thousands of dollars, depending on your income and tax situation. But not understanding this bill, or not knowing how to claim the deduction, might mean you overpay on your taxes. This is honestly one of the biggest tax shifts for seniors that we've seen in the last 20 years. And while it's temporary, it's real money that could stay in your pocket instead of going to the IRS. The One Big Beautiful Bill could mean a major tax break for you, but only if you take action. Check your income, make sure you file correctly, and don't miss out on savings that you're entitled to. If this video helped clarify things for you, hit that like button, share it with someone who might benefit, and subscribe for weekly Social Security updates. I'm here to help you make sense of these changes so you can keep more of your hard-earned money. Thanks for watching, take care of yourself, and I'll see you next time.